Welcome back to Bitcoin Dorks, your daily source for the latest updates on cryptocurrency markets and news. In today's video, we'll be diving into the recent movements of the Bitcoin price following lower than expected CPI, Consumer Price Index, data. How has this news impacted the cryptocurrency market? Let's find out. The Consumer Price Index, CPI, is a widely used economic indicator that measures changes in the average prices of goods and services over time. It provides insights into inflation trends and the purchasing power of a currency. When CPI data is released, it can have significant implications for various financial markets, including cryptocurrencies like Bitcoin. Bitcoin's initial reaction to the lower than expected CPI data was characterized by relatively muted price movements. Many market participants were anticipating a potential surge in Bitcoin's value as a hedge against inflation, given the historical correlation between Bitcoin and traditional inflationary assets. However, the CPI results did not immediately trigger a significant price rally in Bitcoin. There are several factors that contributed to this subdued initial reaction. Firstly, market sentiment and investor expectations play a crucial role in determining short-term price movements. While some investors were hopeful for a strong bullish response to the CPI data, others may have already priced in the possibility of lower inflationary pressures, leading to a more cautious approach. Broader economic trends and external factors also influenced Bitcoin's initial reaction. Other market events, geopolitical developments, or macroeconomic indicators can create a complex landscape that affects investor sentiment and overall market dynamics. Therefore, Bitcoin's response to the CPI data was influenced by a combination of factors beyond the CPI itself. Market sentiment and investor confidence play a crucial role in shaping the trajectory of Bitcoin's price movements following the release of lower than expected CPI data. Market sentiment refers to the overall attitude and perception of investors towards the cryptocurrency market, while investor confidence reflects the level of trust and belief in the potential growth and value of Bitcoin. The impact of market sentiment and investor confidence on Bitcoin's price cannot be understated. When market sentiment is positive and investor confidence is high, it tends to drive demand for Bitcoin and can lead to upward price movements. Conversely, when market sentiment is negative or investor confidence wavers, it can result in selling pressure and downward price corrections. Following the release of the lower than expected CPI data, market sentiment and investor confidence in Bitcoin may have been influenced by various factors. Some investors might view the data as an indication of lower inflationary pressures, potentially diminishing the urgency for Bitcoin as a hedge against inflation. This shift in perception could lead to a temporary decline in demand and a more cautious approach from investors. However, it's essential to note that market sentiment and investor confidence can change rapidly. News, events, and market developments can quickly shift sentiment from optimism to pessimism or vice versa. Therefore, monitoring market sentiment indicators, such as social media discussions, sentiment analysis tools, and investor surveys, can provide insights into the prevailing sentiment and help investors gauge the overall confidence level in the market. Investor confidence is influenced by factors such as regulatory developments, institutional adoption, technological advancements, and macroeconomic conditions. Positive news, such as increased institutional interest or regulatory clarity, can bolster investor confidence in Bitcoin's long-term prospects and contribute to positive sentiment. Conversely, negative news or unexpected events can erode investor confidence and create a more cautious outlook. While the immediate market reaction may be subdued, the lower than expected CPI data could have long-term implications for Bitcoin and the broader cryptocurrency market. If the data suggests a potential slowdown in inflation, it may impact the narrative around Bitcoin as a hedge against rising prices. However, it's important to consider that cryptocurrencies are influenced by a multitude of factors, and CPI data alone may not be the sole driver of their price movements. Bitcoin's price is influenced by a complex interplay of various factors that extend beyond economic indicators like CPI. While economic data can provide insights into the broader market conditions and macroeconomic trends, it is important to consider other factors that directly impact Bitcoin's price dynamics. One of the key drivers of Bitcoin's price is market demand. The level of demand for Bitcoin is influenced by factors such as investor sentiment, media coverage, and public perception of the cryptocurrency. Positive news and sentiment can drive increased demand, leading to upward price movements, while negative news and sentiment can result in selling pressure and downward price corrections. Regulatory developments also play a significant role in shaping Bitcoin's price. Regulatory actions or announcements from government authorities can impact investor sentiment and market confidence. Favorable regulatory developments, such as increased acceptance or clarity around Bitcoin's legal status, can boost investor confidence and drive demand. Conversely, negative regulatory actions or uncertainty can create selling pressure and dampen market sentiment. Technological advancements and innovations within the cryptocurrency ecosystem also have a direct impact on Bitcoin's price. Improvements in the scalability, security, and utility of Bitcoin can drive adoption and increase demand. Additionally, developments in blockchain technology, such as the implementation of Layer 2 solutions or advancements in decentralized finance, DeFi, can enhance the overall value proposition of Bitcoin and contribute to its price appreciation. In conclusion, the muted price movements of Bitcoin following lower than expected CPI data highlight the complex dynamics at play in the cryptocurrency market. While the immediate impact may be limited, it's important to consider the long-term implications and the interplay of various factors that influence Bitcoin's price. As always, staying informed and conducting thorough research is essential for navigating the ever-evolving